Hey there, Bruce Woodburn, CrossCountry Mortgage, WDBO Radio, and it's time for the three big things you need to know. Three things we got to cover today that I think are really important, whether you are in real estate, considering buying a home, refinancing. But I'll tell you something, this is stuff that you're going to want to hear. First big thing we want to know is inflation. What's going on with inflation and interest rates? I think we're going to see an improvement in interest rates, and I'm going to share with you why I do believe that that's going to happen. Secondly, Fannie Mae, Freddie Mac are making it easier for high credit score, high net worth people, and tougher for the average person. We're going to talk about what they're doing and how it impacts you. And then the third thing, if you'd never had any credit, can you still get a mortgage? I'm going to show you and talk to you about a program that can help you if you do not even have a credit score. In the past, you couldn't do it. Now I'm going to show you how. First big thing you need to know. Let's take a look at this graph over here. This is a graph on the consumer price index and the producer price index. So producer price index is in red, and that's going to tell us what wholesale is paying for products. And then the consumer price index is what do we pay for products? What does it cost us for a product? And generally, if the wholesale is getting a better price, it's generally going to turn around and benefit us as well. Doesn't always, but it usually will. And we can see that as things cross over this graph, they tend to trail the producer price index. And we saw all this back here where it crisscrosses, where things were really good back in these times. And then we started to really experience inflation, and inflation started to peak right here around January, February of 2022. Now look what's happening right now. Things are coming back down. We saw a crossover right here, and we are seeing things drop. That means that bonds should start improving. And if you're one of my fans and you listen to this show or my radio show, you'll know that interest rates are tied to the bond market, not to prime rate. Now, here's the thing. Last year, 1 year ago, the producer price index was at 11.7. Right now, it's at 2.7. That's a real win for the bond market. That's a significant change. I think that we should start seeing interest rates drop a little bit. Now, just hang on. If you're ready to close on a house, I think things might improve in the next couple of weeks, but it's all up to the way the market sees this. I'm just telling you, the loan arranger thinks we're going to start seeing a little bit of an improvement in interest rates coming about. That's the first thing you need to know. Second big thing you need to know is Fannie Mae and Freddie Mac, and I'm not talking about people that are baking cookies over here. They're the ones that make the guidelines, set the rules for you and I to get a conventional mortgage. Now, they've decided that they want to make their risk-based pricing a little bit tighter. That means it's going to get more difficult for the lower end, lower credit score borrower putting a little less money down. They're going to pay a premium for the terms of a mortgage. And the high credit score borrower with more money down is going to get a better rate. Now, listen, I believe that we should all be rewarded for good behavior. However, we have a dilemma on our hands, and that is we need more people to get into houses. Why would they make it more difficult for the average person with a little lower score or not superior scores to get into a mortgage? Just doesn't make any sense to me. But I'm not the one that makes the rules, but I always promise to give you the truth. And then the last thing is in the past, if you were a buyer and you did not have a credit score, you couldn't get on a mortgage. There was no financing available for you. So I have a program at CrossCountry Mortgage that I can help you with if you don't have a credit score. Now, this is really designed for two people. One has a score, one does not have a score. It's not designed for two people with no score. So let's just say Tommy has income and a good job, but he doesn't have any credit. No credit score. Pull up credit, nothing comes up. He's paid cash for everything. Jane, on the other hand, she was taught right, and she's had a credit card since she was in high school and really done a great job at maintaining her credit. And they want to buy a home together, but we need both incomes in order to qualify. Now, if Jane's income is greater than Tom's income that has no score, then I don't need any alternative type of credit at all from Tommy. He's good to go. We can use both incomes. If Tommy's income is greater than Jane because Jane has the credit score, then all I need from Tommy is 2 forms of alternative credit. Now, what is alternative credit? Alternative credit may be showing that you make your gym membership payment every month, your auto insurance payment, your cell phone bill, you pay the rent out of your account. Now, it has to be third party verified, and I've got to be able to show 12 months. But now there's hope in the future for you, even if you don't have credit. My name is Bruce Woodburn, Cross Country Mortgage, WDBO Radio, Saturdays and Sundays. And those are the 3 big things you need to know. Have a great week.